Hello everyone, this is Juan Sarmiento and today is Friday, July the 30th. I have one trade to make and then we will go through all our trades. Notice that there is here an illegal 100 shares. We're going to deal with that as well, and in the process you will learn something new. Okay, first let's go to numbers, and I have my candidate here is Yum. I'm going to copy the trade here that I am suggesting for you and take that over here and paste it. Order entry, paste, and then analyze. By now you should know how to enter one of these trades, but if you don't, you can enter each leg, and in between you press the control key, and that makes it possible. And let me just show you quickly. We are selling September's, okay, September 3rd, and we're going to scroll down to 130 is my strike price, and here we're going to sell 1. So just click without doing any other pressing or any keys, just press the on the bid price, and then it comes right here. Now you do press the control key to enter the same trade only on the put side, and there it is. Okay, that's a straddle, a short straddle. And the back month, it needs to be, well, the front month needs to be a bit about around 30, and it's 35, so that's good. And the back month could be October, but that's not my favorite. Okay, it needs to be 90. You could do the October, but you would have to keep a big eye on it, okay, because it will move quickly. We want to buy January. It's a little further back, but that's where I feel comfortable. Okay, so let's press the control key again, and I'm gonna press the key 2 times. Okay, ask and ask a couple of times, and that's it. Same here on the put side, once and twice, and that created my trade exactly as I have planned it here. All right, and so you choose your date. The front month should be around 30 days, and the back month 90 days. You're going to buy 2 straddles on the back month and 1 straddle in the front month, and then you can do any multiples of that, okay, depending on the price. And when you say create duplicate, you can see confirm and send. You would see the price, okay, 2400. Now what is the maximum I would do personally? 10% in capital of my trading account. That's really about 1 to 2% risk, and the reason is you always have value left on the Genie trade. Okay, you always do, and so you're not going to lose any more than 2%, provided that you don't roll it over too much. Okay, it doesn't. You only make the money and run. Okay, so how much am I going to do? How many? Well, look at my current account. It's 88, so I could do 8,800. Okay, so create duplicate and confirm and send. Let's say here multiple, just so that I could see how much of a buying effect I have. It's not going to allow me to buy it because I have an illegal share here, and that means I get a margin call. Okay, so but if I were to do it, I couldn't do 4, I would have to do 3. Okay, let's save that. Not send it yet because we have to deal with those illegal shares. And here is your 3 lot, is 6633. Let's cancel that. Let's save it under the Analyze tab by saying Analyze Trade, and we'll come back to that. Okay? Here it is. All right, let's see how we chose this. I have a spreadsheet here, and you can see that it's $7,350, and that's the price that I had calculated, $24.50 at the time that I did this, and I just multiply by 300, and that's the price I got. Okay, Now look at this. I look at the earnings, and the expected earnings was 95 versus the actual was 125. You can take a look at the chart here, and that will give you that information. If you don't know how to generate that, call Thinkorswim and they'll tell you how to put this earnings little piece of information here on your chart, and there it is. Okay, you can see it clearly. 0.949 versus the actual was a beat of expectations by 1.29, and then I calculate this by 34 cents, which is about 35% beat. So that's a trade. That's a big jump in the earnings above expectations. Then we have the volatility here. I have the front month volatility versus the I'm sorry, the back month versus the front month, and then I average the two puts and calls for the two time expiration periods, and then that gives me an average of 19, 21 and 19. The difference is 1.975. That's acceptable. Any more than 3, and then I will be worried that the volatility is not in my favor. Then the liquidity is the price of the mid versus the natural, and that's 4.3. That's not very liquid, okay? But I'm running my chance because I'm very motivated by this big earnings speed. And then the current IV percentile is at the bottom of the range. As you can see here in this chart, which is the implied volatility, it's very low right now, okay? Compared to the 1 year history. Good. So let's, we come back to that. Let's go to our trades here, starting with Adobe. Oh, that's been outperforming the markets. Big jump on it. Let's go to Analyze tab. And here we have a risk graph, and it tells you what we need to do. Okay, so this expires August the 6th. How much to expiration? 7 days. So we can do a rollover right now, right here. Analyze rolling. You don't want to roll if this is a big loser. If it's a winner or a break even, you can do the rollover. And we're going to go 1 month from now. So these are August 6th, or we can do September, whatever, 3rd or 10th. Okay, here we go, and we're going to get back 1155 times 100 is 11,500, $1,155. Let's do that. Confirm and send. That's a simple rollover. Okay. Move my. Okay, let's do then the DHR. This is another big performer, and this is what we want. We want these big performers, and then eventually they collapse if they go too fast. Okay, and I've been taking profits. It's 290 my previous, and now it's 298. Oh well, then we can do a rollover here. The short options expired August the 20th, and that's 21 days from now. But we can certainly move this one up, and that's a way to take profits. Analyze rolling. Here it is. And that looks like a calendar. All we have to do is move the call higher. The one that we are buying will be higher, but make sure that it's the same strike price, the same expiration rather. One strike price higher or two, and the same expiration, and then you get a credit. That means you're taking profits. Take a look at the graph. Without is 40 delta. With it, we are neutralizing our deltas just a bit. You can even neutralize it more if you say, oh no, this stock is way overextended, it's going to begin to fall. You can go to 310, and that gives me more credit, and my delta is more neutralized. Take a look at the chart. Do I want to do that? Possibly, because it's hitting new highs, but I don't want to abandon the possibility that it could go higher, so I stay with a delta positive. Then if the stock begins to collapse, then volatility would get in and help me on the downside. So it needs to be delta positive just a little bit. Okay, let's do that. Confirm and send. and there, it's going to be coming soon. We just let it be. Oh, there it is. It rolled over very nicely. Facebook dropped, and this is rather unexpected, and this is my 100 shares negative. Okay, I didn't expect that to happen. So what do? Well, we do have a put here, and we have a call here, and so how do we do this? What we want to do is close this call, and we had a long call and a short call. That's why we got assigned, and the price was 330, as you can see. Well, select those two, analyze closing, and it's a covered call. And you can see it needs to be August, same strike price. That's no big deal. That's why we had that long call there. The other one, that outstanding, I rolled it over to 375, and now the stock began to drop. Okay, we are going to close this so that we can get that short option out of the way. Your broker is going to say, hey, you can't keep that there because you have an IRA account, and they will call you and say you can't have a negative shares in an IRA account, and this is what you do to remedy that. Or you can have a standing order that if that ever happens, that they would use the same strike price call to close it for you. And they will do that. They're smart people. They know what they're doing. And then our illegal shares will disappear. And you can't have it overnight. That's simple. And there it is. Now we can do our YUM trade, right? Let's go back. And then we'll do the rest. Okay, here is my YUM. Oh, the price has fallen a little bit. Good, let's do that. Create duplicate, confirm and send. Yep, 7,000, and we still have $30,000 for other trades. Okay. Okay, let's proceed. And while we wait, Facebook, okay, let's go to HCA. HCA, looks very, very nice and flat, and it's in the cone, and my short options are still way ahead, way in front on the 20th of August. Let's take a look at the chart here. Yeah, this stock it's been moving sideways, and as it moves sideways, it makes me money on the sideways side. Okay, here it is, a little bit of money, not a whole lot, but 200, it's better than losing money, isn't it? Let's go to CarMax. CarMax, 6th of August. This is perfect. It should be rolled over now. And we have how much to expiration? 7 days. You can see the right, 7 days. So we can roll this over, analyze rolling. And we're going to go to September the 3rd. Okay. And we get $4.60. Confirm and send. Yeah, why don't we, instead of that, let's look at the resulting trade. Oh, it's more bullish. Without it, it looks neutral. With it, it looks more bullish. Okay, confirm and send. And then we say, well, is perhaps too bullish for me? Well, if that's the case, take a look at the chart. Does it look bullish? It looks pretty neutral right now. So you could let it be until next week. I don't have that luxury because I only trade this account once a week. But you could wait a couple of days because this looks neutral, and if it moves sideways or lower, you could make more money that way rather than on the bullish side. And then if this option trade was to fill, it would look more like this. Then you say, oh, okay, I could sell one of my long calls, wouldn't you? Analyze closing, just sell one, or you can roll it up, just sell one. And that's a way to take profits, okay? And then it becomes too negative, I think. We don't want it negative, we want it neutral. Okay, so I think you can roll it up rather. but you can see my strike price is 130 and it's 134 here. I think I let it be. Okay, let's move on to MS. That's Morgan Stanley. Same thing, is very neutral right here. August 20th, the expiration. Do I want to leave it there? I kind of do. It looks like it's going to move sideways to lower. If it moves lower, possibly the volatility would increase and then I make volatility profits, meaning the volatility would increase the value of my long options and the front month options would deteriorate with time. Let's go to Nike. Hitting new high. Okay, we could take profits on that one, I would think. Okay, as you can see, it's over the smiley face here, and I already did a rollover. We can do another. You have how many outstanding calls? Well, I have 3 here, 5 there. We have 2 long calls that are outstanding, and we have one that we rolled over already, so we can do another rollover, and we can sell puts as well. Okay, so if we were to sell puts, it would have to be the same as your long, short calls. So change calls to puts, and we are gonna get 10 cents. That's pitiful. I don't want to do that. Let the stock fall and then appreciate the short puts, then I sell them. But let's sell the call, one of the calls, or roll it up. Analyze rolling. Okay, and I said 2 of them can be rolled over to 150, no, 165, just like the one that I already rolled. Not to December, we need to change the date to the exact same. And look, it becomes very neutral, and we have a credit of $1,040. Take a look at the chart if you wish. It's hitting new highs, yeah. And I could do either way, could go either way. It's overextended, so it could take a dive, or it could go higher because it's been doing it. Yeah, and when the stock moves strongly up or down, that's the kind of stock that I like to trade, okay, for this particular form of trade. Now PayPal has been taking a big beating lately after earnings, surprisingly. Look at that. Okay, we're right here and it seems like it's going to go lower. Okay, so when the stock goes lower, then the volatility rises and it favors my trade. Okay, here we have August, and fortunately I had sold a call. I rolled up a call, so that means that I actually make money when the stock continues lower or begins to drop. Okay, so that's why rolling up is a good idea, because when the stock collapses, you already have a delta, neutral to delta negative position. And then you can always do what? Well, if you think that the stock now will reverse and go higher, perhaps hitting the Ichimoku cloud, I think maybe not right away, maybe before next week, possibly. Okay, so how could we neutralize this trade? Well, it's below 280. You can 280 is my strike price. You can go down. I don't really feel like going down. I think this is going to be it. Okay, I'm going to leave it alone. We'll deal with it next week. UPS has also been going down. Oh, this is now, look at what happened. Now we're making money on the downside. Okay, so what do? My strike price is 200 and the stock is trading at 191. So just like we do the roll up when the stock is going up, we're going to do a roll down when the stock is going down. And how do we do that? We select the outstanding puts. We have 4 of them versus long versus 2 short. So the difference is 2, so we can do roll down 2 and analyze rolling. And we're going to roll down 2 only, and the new price is 190. Let's say it's the closest strike price, but instead of August 27, we're going to say August 20. And my August 13 is the final day for that. And look at what happened. I neutralized my deltas from 155 to 52, negative deltas. I think that that's not good enough. I need to neutralize a little further. So let's go and sell instead of doing the roll down. Let's just close one of the puts. Just sell one of the puts. Okay, now that becomes 39. Not much different, is it? Versus 52. Well, 39 is better than 52. So let's just sell the one put. And right now it's minus 155 deltas, as you can see here. So doing the one here, it becomes minus 40. I'm going to do that. And then, there, it filled. Was filled. And then, okay, let's go and this, I think this is pretty much all for the day, but I'm going to make sure that all these trades are filled. And how do we do that? Well, just adjusted trading, okay, from Adobe and all that. All that, those that have not filled, you can adjust the price. Okay, let's start with Adobe. What do? I'm going to have to lower my credit bid. No, the ask. Lower the ask is what I'm saying. So we say cancel replace, unlock it, and confirm and send. And keep doing that until it gets filled. On the stocks that you're trading, you have to increase your bid. Okay, so cancel replace, unlock it, and that gives you a bigger price. And you keep doing that until they get all filled. CarMax, unlock it, and that's a lower ask. Okay, I keep doing that until they all get filled, or I get bored. Or you can even lower it before the below the market price, particularly a case like this in Adobe when the natural is 647. That's a big jump. Okay, so let's lower it 1040. I don't really much care. We are getting a big credit either way. Okay. CarMax. It just needs to be between mid and natural. And that's all for today. Thank you very much for joining me, and see you next time. Bye-bye.